The much-anticipated merger of L&T Infotech and Mindtree will create the sixth largest IT company by revenue in India. L&T will hold 68.7% in LTI Mindtree. Now, under this deal, Mindtree shareholders will get 73 shares of LTI for 100 shares held in Mindtree, an effective swap ratio of 0.73. We estimate that the share swap transaction is broadly the valuation that is reflected in the current market price. Over the longer term, the deal is positive for bringing in talent bandwidth and capabilities to bid for larger projects across verticals. Mindtree enjoys a higher margin profile than LTI, with the differential being 130 basis points in FY22 on an EBITDA or EBIT level. Further cost synergy, especially through lower SG&A expenses, should come easily. The management has mentioned that client overlap is minimum between the two entities. Hence, a good cross-selling opportunity cannot be denied, and the combination of cost and revenue synergy should augment the margins going ahead. LTI and Mindtree's exposure to different verticals is a major plus, and this kind of diversification helps growth and limits the impact of headwinds in a particular industry. Contribution of the BFSI segment to LTI's FY22 revenue was 47%, and to Mindtree's revenue it was 18%. The share of high-tech and media segments in LTI revenue was at 12%, and the share of the communications, media and tech segment in Mindtree's revenue was 43%. Once combined, LTI Mindtree would have a well-distributed revenue exposure, with BFSI contributing about 35%, media and tech 25%, and manufacturing, consumer packaged goods, retail and healthcare at 26%. Post the merger, LTI Mindtree will become the sixth largest IT company in India. Management has indicated that large deals of $100 million typically go to a player with scale. LTI Mindtree will get to bid regularly for such large deals that provide long-term growth as well as revenue visibility. We believe the merger would be marginally earnings accretive. Excluding the synergy benefits, EBIT margin should expand by 100 basis points to 18.1% in FY23 and 18.6% in FY24 as Mindtree enjoys better margins over LTI. EPS should see a 2% point improvement in CAGR over 2022 to 24. LTI shareholders would see a dilution to the tune of 40.7%. Mindtree and LTI bring to the table complementary set of vertical expertise, talent pool and client exposure. Their geographical exposure also expands, and in countries where both are present, there is scope for rationalization. The combined deal pipeline is worth $3.6 billion, indicating a strong demand outlook. In the quarter gone by, LTI had announced 4 large deals worth $80 million. Mindtree, which has dominance in smaller sized orders, plans to phase out tail accounts and focus on the top 100 accounts. The combined entity would have better bandwidth to bid for large contracts. Interestingly, both entities have already worked together on some deals in the past. In fact, there have been occasions when clients themselves have asked for joint bidding as the other entity has the complementary capability. A working experience of such a kind and joint parentage should help overcome integration issues for both the companies. Among the key risks to watch is attrition rate. This may edge up if uncertainties regarding post-merger business rationalizations are not handled well. Having said that, the recruitment philosophy of both companies appears similar as their headcounts are increasing at a very similar rate every quarter, and more than 50% of those are freshers. The companies plan to add and reskill freshers and gradually flatten the delivery pyramid. Mindtree's management had been apparently quite aggressive in getting the new recruits billed on a very quick note. The other risk to watch is the shuffle at the senior leadership level. The departure of LTI CEO Sanjay Jalona was announced along with the merger news. Debashish Chatterjee, the CEO of Mindtree, will now be heading the combined entity. Jalona has steered LTI for the last many years, and his departure may have some impact. The risk of some more senior leadership moving out cannot be ruled out. Now coming to the valuations. Both the stocks have consolidated further after our cautious notes for Mindtree, which is right now trading at 21.2x of FY24 projected EPS, and LTI that's trading at 23.5x of FY24 projected EPS, but they are still trading above their historical averages. Though we are positive about the strong demand outlook for IT spending and acknowledge the scale benefits, we still would like to wait a tad more for better levels.